AJ posted this nice analysis, and I'm sorry, this is probably really small.
Not bad, not terrible.
But he looked at the current rally compared to other rallies after unusually long gaps and tops over the past 4 years. So the rally that we have here now is the first row. Started on June 25th, and he's got the last day here as of yesterday. Started at 182, closed at 263. It's a 44% gain.
Right.
And the length of the rally in trading days totals 11 days, which is the second longest rally that he's got on this table. And he shows the daily gains, and then he shows what kind of pullbacks we had. And so perhaps today will be the first pullback in this rally. Rather than go over this whole list, this is interesting to look at. I would encourage people to look at AJ on X, or pause the video at this point and take a look at the details.
Right.
Again, this is a little bit short term for me, but still I think it's interesting just to kind of look at how previous rallies have gone. AJ's comment here was that the second half of the rallies tend to deliver higher gains than the first half. 7% in the first half versus 8% in the second half. So maybe that's not statistically any different, but and in most cases, a rally is followed by just 1 day of a pullback.
1 day. Okay, interesting.
In this little sample size of 20 rallies or 19 rallies. This being the 20th one that we're in now. So anyway, this is, for what it's worth, I thought this was interesting.
Right.
Okay. Volume. Let's talk about volume.
Yeah, that's been an interesting part. Yeah.
Everybody talks about the stock price. Everybody looks at the stock price, but behind it is volume, the volume of shares traded on any given day. So what I did here was a little analysis of Tesla and some other companies over the last year, and looked at the volume times the average price during the day. And I took a shortcut to calculate the average price. I looked at the open, the low, the high, and then the close, and averaged those four together.
Okay.
It's not perfect, but close enough.
Right.
And then I calculated the amount traded, the value of the shares traded each day. And that's what's shown on this chart, is the daily value. And so you can see that there are peaks where Tesla stock has traded over $45 billion in 1 day.
Wow.
Okay, I can see 4 of them on this chart.
Right.
Over the last year. But you could say over the last year, up until quite recently, the amount of volume traded in Tesla stock was slowly declining.
Yeah.
And I've got the person sleeping in the bed there in early June. Tesla investors not so interested in trading in the stock.
Yeah, exactly.
But they woke up, and now you can see at the top there's a bit of a party going on. Okay. So here's how it compares, though, to some other big companies. So Tesla, its daily average over the last 12 months is about $24 billion a day. And it's traded $5.9 trillion worth of value in 1 year.
Yeah.
Almost 6 trillion traded in Tesla stock. It's staggering.
Yeah.
The current market cap of about 840 billion. So it's traded about 7 times the current market cap of the company. Right. So it's staggering the number of shares that are just trading hands every day.
Yeah.
Right. Now, NVIDIA in this time period actually is outpaced Tesla in terms of trading volume, trading value, 31 billion a day, almost 8 billion of NVIDIA stocks traded over the last 12 months. Its market cap now is over 3 trillion. And based on that current market cap, it's about 2.5 times. But if you factor in the fact that NVIDIA's market value has gone up so much,
right,
the amount of market cap actually is way more than 2.5 times.
Right.
But it may not be as much as 7.
Yes.
My guess is it's probably around 5, maybe 6. But then if you look at Amazon, Apple, and Microsoft, they're trading between 7 and 11 billion a day. So it's less than half of Tesla.
Yeah, substantially. Yeah.
Right, and 2 to 3 trillion of value a year, and less than 1 times their market cap, their current market cap.
Right.
So traders aren't so interested in those stocks generally. There are times during the year, and I'll show you really quickly what that looked like for these other companies. But Tesla and NVIDIA are two, very popular stocks for traders.
So do you have any analysis, maybe that's coming up, but do you have any analysis on why you think Tesla is traded so much more, or just off the top of your head, why it's traded so much more?
Well, I think there's a huge retail participation in Tesla,
Right.
which helps.
Right.
But I also think that there's enough volatility in Tesla stock that hedge funds and other institutional players, pile in and then pile out.
Boy, those were going to be mine too. So we're 100% aligned on that. Volatility has always been my sweet spot. I have always loved the stocks that were volatile. From the time I was in my early 20s, I was playing Fairchild camera and instrument, which would go from 30 to 110 and then back to 30 and then back to 110. It was crazy.
Crazy way to make a living, Randy.
Yeah. But in those days, I had a much stronger heart.
Yes. So here's the same chart for NVIDIA. Investors were, over the last year, they were the most sleepy at the end of the year, which actually would be expected. That's usually a pretty quiet time between Christmas and New Year's.
No.
And they partied pretty hard there in March, over 100 billion traded in one day.
Wow.
And there's been some other periods of trading activity as well. Here's Amazon. It looks like trading kind of spikes around each quarter. It looks like a very sort of quarterly pattern to me.
Interesting.
And then here's Apple. Trading perked up around Apple's AI announcements.
Right.
50 billion a day. And then the end of the year slumber as well in Apple stock. And here's Microsoft. End of the year slumber, or maybe Thanksgiving slumber in the case of Microsoft. And maybe the OpenAI kind of wranglings created some volume in Microsoft stock and towards the end of last year.
Yeah.
If I was to guess what's going on there. Okay. So let's totally shift gears.
Okay.
Randy, I think I have completely figured out what I'm calling the recipe for autonomy.
All right. Yay. Good for you.
Okay. It's 5 steps. And your mind will be blown when you see how easy this is.
Okay.
Here it is. 1, build 3 gigafactories. Easy peasy. Tesla's showing how to do that.
No problem. Yeah.
Okay. 2, sell 5 million EVs. Okay. Easy peasy. 3, invest billions in AI compute. And also I would say you need to attract AI talent. It's not just the compute, but people too.
Yeah.
Okay. 4, collect billions of miles of data. Okay. And you can't really do that unless you've done number 2. And you can't do number 2 unless you've done number 1, right? So these are all built on each other. And then 5, this is probably the simplest part.
Yeah.
Kindly ask an AI system to create a perfect autonomy model for you, a driving model.
Exactly.
It's all you have to do, Randy. This is this easy.
Yeah, and then spend the first 3 or 4 years trying to do that using traditional methods of coding, and
mistakes were made along the way.
Well,
sure.
It was just what was available. There was no. We didn't know about LLMs and amazing that even after they changed the method and it was dramatically better, it still didn't take 2 weeks to fix it. It's still been a hard job.
Yes. Now, in all seriousness, none of this is easy. This is a colossal effort at every single point in the path.
Yeah.
And I'm saying all this because, we continue to hear from various people that, once Tesla solves this, then others will have solved it too.
Right.
And I don't know where this magical thinking comes from, but no, it's not that easy. Tesla is not done when they solve full self-driving.
Right.
And I'll show you why.